All right, welcome back to the podcast. I'm Mark, and with me as always is the ever-incisive Jenny. She sees through all the tech bro bravado.
Hey everyone, Jenny here, ready to dissect another tech titan with Mark. And today, we're talking about a company that has been, frankly, on fire. NVIDIA, not just warm, but radiating heat.
On fire is an understatement, Jenny. It's more like they've launched themselves into a whole new galaxy. We just got some fresh data for Q2 2025, and it's truly noteworthy. They've not only maintained, but times their dominance in the discrete GPU market. It's a remarkable feat.
Okay, wait, let me get this straight. We're talking 94% market share, right? That's what I saw in the reports. 94 freaking %. Most companies dream of 40% and throw parties. NVIDIA is just existing at 94%.
Exactly. 94% for discrete GPUs in Q2 2025. That's up from 92% in Q1. I mean, we're not just talking about winning. We're talking about a near monopoly. And get this. During that same quarter, GPU shipments surged by a notable 27%.
27% quarter over quarter? In a market that's typically not quite that explosive? I mean, what caused that kind of spike? It sounds a bit artificial, doesn't it?
You're onto something there, Jenny. It's the tariff panic buying. Dr. John Petty, a veteran analyst in the semiconductor space, spells it out quite clearly. He noted that buyers were trying to get ahead of expected higher prices due to anticipated tariffs. People were scrambling to buy GPUs before potential 25% plus tariffs on Chinese assembled components kicked in. Think of it as a pre-tariff rush.
So people were just stockpiling GPUs? Like it was toilet paper at the start of lockdown, but instead it's graphics cards for gaming, or, even more significantly, for AI? That really doesn't sound like a stable market, does it? A bubble, perhaps?
It created a temporary, artificial demand surge, you're right. And the numbers back it up. The desktop GPU attach rate hit an astonishing 154%. Think about that. That means for every CPU sold for a new desktop PC, about 1.54 discrete GPUs were scooped up. Historically, that number hovers around 100%, meaning 1 GPU per CPU. This suggests a lot of upgrades and quite a bit of pre-buying activity, as people tried to beat the impending price hikes.
That's wild. So people weren't just buying new PCs, they were actively going out and purchasing extra GPUs, either to upgrade existing systems or, as you said, to beat the tariffs. And while all this is happening, AMD is at a mere 6% market share, and Intel, despite their big ARC launches, is barely registering. How is this even possible? Why couldn't AMD or Intel even make a dent in that frantic buying frenzy?
Well, that brings us to what I call NVIDIA's invisible moat, and it's called CUDA. This is where NVIDIA placed a multi-billion-dollar bet back in 2006, when everyone else was primarily focused on making faster graphics for games. NVIDIA, however, made a strategic investment in a parallel computing platform, an API, that allowed their GPUs to perform general-purpose computation, not just graphics. And that investment created significant developer lock-in over years.
CUDA has been called the Windows of AI. Is that a fair assessment, Mark? Because if you're not in the NVIDIA ecosystem, it sounds like you're playing catch-up from a substantial disadvantage, if not an entirely different ballgame.
It's more than fair, Jenny. CUDA effectively transformed the GPU from a mere graphics accelerator into a universal AI engine. Over 95% of enterprise AI today runs on CUDA. All the big AI frameworks, like TensorFlow and PyTorch, were built with CUDA in mind from the ground up. It's a self-reinforcing loop. More developers, more optimized software, which then drives more demand for NVIDIA hardware. AMD's attempt, ROCm, has less than 15% adoption and faces considerable challenges due to compatibility issues, and NVIDIA's significant 15-year head start. It's a chasm, not just a gap.
So they didn't just sell faster hardware, they sold an entire ecosystem that became the industry standard. That's a strong lock-in indeed. It's not just about raw performance anymore. It's about the tools, the libraries, the community of developers. Which leads me to my next question. Given this dominance and their impressive $4 trillion market cap they hit in July 2025, How are they navigating the increasingly complex geopolitical chess game, particularly with the U.S. China tech war heating up?
Oh, that's a whole other layer of complexity, Jenny, and it's where NVIDIA has shown remarkable agility. On one hand, they've developed custom, downgraded chips, like the H20 AI chip and the RTX Pro 6000D, specifically to comply with U.S. export restrictions to China. They're essentially saying, "We'll make a chip that meets your rules, Uncle Sam, so we can still sell to a critical market." It's a careful tightrope walk.
Wait, so they're developing chips that are timed deliberately weaker just to get them past export bans? That's quite a strategy. And they're still paying a 15% revenue fee to the U.S. government for those licenses, right? That seems like a hefty price for market access.
That's exactly right. A 15% revenue fee for certain chip sales in China. It's a high price to pay, but it gave them continued access to a huge market that was otherwise largely closed off. However, China's not just sitting by passively. In September 2025, China actually banned companies from buying NVIDIA's RTX Pro 6000D chips, essentially retaliating. It's a clear move to push their own domestic GPU development. The pressure is mounting from both sides.
So playing both sides is incredibly tricky, to say the least. It just shows how essential chips have become, morphing into political pawns in a global power struggle. And you mentioned the tariff panic buying earlier. That must have been a direct consequence of these geopolitical tensions, wasn't it? People anticipating the economic fallout.
Absolutely. It wasn't just individual consumers either. It was also data centers and large enterprises in China anticipating these restrictions and tariffs, buying up what they could before the door closed further. It's a very complex dance, but NVIDIA has shown incredible cunning in navigating it so far. They're masters of strategic adaptation. But here's the interesting part, Jenny, and this speaks to their future trajectory. While they're experiencing this short-term surge due to external factors, John Petty Research projects the overall PC GPU market will contract by 2.9% annually through 2028. You have this massive market cap, this incredible dominance, but their traditional market, the foundational one, is actually set to shrink. It's a curious dichotomy.
Okay, so a shrinking traditional market alongside a $4 trillion market cap and a 94% share? That screams pivot to me. How is NVIDIA planning to keep growing and maintaining that valuation if their core market is shrinking? They can't just keep selling fewer chips for more.
That's the beyond the GPU strategy unfolding. They're pivoting even harder into AI software and services. For instance, they're now licensing AI models like LLaMA 3.1 Nemotron. So they're not just selling you the hardware to run AI, they're selling you the AI itself, the intellectual property. This could be a huge new revenue stream, potentially generating tens of billions annually by 2027. They're evolving from a hardware company to an AI platform powerhouse.
Selling the blueprint, not just the bricks. That's a shrewd move. It reduces their dependence on hardware cycles. But can they sell software as profitably as these $10,000 AI GPUs? The margins on software can be high, but hardware has its tangible value at that scale.
That's indeed the big question, Jenny. The profitability of software at that scale, especially against open source models, will be closely watched. But their other strategic move is this $5 billion investment in Intel. Think about it. Why bet on struggling Intel instead of, say, AMD? Or expanding even further with TSMC, their primary foundry partner?
That caught my eye too, Mark. Intel has been having a tough time with its manufacturing and market share in some segments. Why would NVIDIA, the king of the hill, invest in them? It almost seems counterintuitive, unless there's a deeper play here.
There is. It's about ecosystem control and strategic integration. NVIDIA's Blackwell GPUs, their latest generation, need to integrate seamlessly with the dominant server CPU architecture, which is still Intel's x86. This investment ensures that their powerful Blackwell data center GPUs will play nice with Intel's CPUs, broadening their reach and securing their data center dominance against AMD's growing server chip presence. It's not about being friends. It's about strategic integration to solidify their AI platform. And it's seen as a move to ensure the health of the broader semiconductor ecosystem, which the White House is apparently quite keen on, given the push for domestic chip manufacturing.
So NVIDIA is saying, Hey, we'll help shore up Intel's x86 platform to make sure our GPUs have the best possible hosts and aren't bottlenecked by an ailing CPU market. That makes a lot of sense, especially considering the geopolitical implications and the desire for a strong domestic tech base. And the black market for H20 chips in China. That's just a byproduct of all this tension, isn't it? The demand finds a way.
It absolutely is. We're hearing reports of these chips selling for 3 times their MSRP on the black market in Shenzhen. That indicates immense unmet demand in China despite the official bans, and it also accelerates the push for China to develop its own homegrown GPUs. It's a delicate and high-stakes environment where policy directly fuels shadow markets. It's a messy game of cat and mouse.
So to try and sum it all up, NVIDIA's success is a complex blend of laying a critical software foundation with CUDA early on, adapting incredibly quickly to market shifts and geopolitical pressures, even with downgraded chips, and now smartly diversifying into AI software and strategic partnerships. It's far more than just making the fastest chip. The future looks like a wild ride for them, doesn't it? A roller coaster that keeps finding new tracks.
It's a testament to their long-term vision, strategic fortitude, and tactical agility, Jenny. They created the foundational technology, then capitalized on the AI boom, and now they're navigating an exceptionally complex global landscape of shifting markets and geopolitical maneuvers. It really is a masterclass in market dominance and strategic evolution. And it's going to be fascinating to watch this pivot to a full-stack AI platform play out. Will software be as lucrative as hardware was? Or even more so? We'll have to keep a close eye on their earnings reports.
I'm sure we'll be discussing this much more in the not-so-distant future. What an insightful look into NVIDIA's multifaceted strategy, Mark. Thanks for breaking it all down with your usual clarity.
My pleasure, Jenny. Always a stimulating discussion digging into these tech giants with you. And thank you all for listening.
We'll catch you next time, tech enthusiasts.